Alright guys, I'm back. In this video, I'm going to be taking you through all the common mistakes most traders make when they first start setting support and resistance. I don't want you guys to be making these mistakes in the long run, so let's get to it. Roll the intro. Now, I'm going to dive right into it. I got a USD JPY chart. From the last video, if you guys watched it, remember I told you can jump on any chart, whether it be Apple, Amazon, Bitcoin, weed stocks, it doesn't matter. Get on any chart, look at the time frame. All you literally have to do is search the company of interest on Google and a chart will come up alongside it, or you can just scroll over to the chart section. Get on any chart, it doesn't matter what chart. Right now we're looking at a USD JPY chart, 15-minute chart. Now I'm gonna get a red line right here. It's already set for me, but just to show you guys, I drop it in place. I'm gonna drop my red line at the close of this most recent candle here. Okay, I know we haven't gone through candlesticks yet, but don't worry about that. We're looking for just support and resistance. Okay, so same thing as last video, we're gonna go through check marks for support. Okay, so I'm going to mark off 2 there on the chart. Also going to circle those. Now notice where I set those lines. Circle that third one here. I didn't set the lines right at the tip of the wicks. I set it in a place where I can get the most touches on my support line. That is very important when you're setting support and resistance. You need to find a place on the chart where you can get the most touches from the line. I mentioned something in the last video named stop hunts, and that's why a lot of people will attempt to trade their support and resistance and then wondering why the market came up maybe 20 to 30 pips and then crashed right down in the direction that you had anticipated to go. You can't always get a clean touch off of your support and resistance. There's always a place in the market where people are picking up contracts. It's not always going to be at an exact same number every time. So finding the most touches or consolidating the most touches for your support or resistance is very important. That's tip number 1. We're going to take you through another pair just to show you that. USD CAD, okay? We're going to stay on the 15-minute time frame. All right? Right now, I'm going to clear my lines that I already have on here just so I can drop new ones. Okay, my lines are clear. So around the 15-minute time frame, I already see one support here. Okay, I'm going to drop a line there, put 2 check mark there for you. 2 circles, 2 circles. Perfect. That's great. I want to point out, when you begin to day trade, you will start to figure out what type of trader you are. Are you a swing trader or are you a scalper? Are you somebody that likes to get in and get out of trades within 15 minutes to 1 hour? Or you are a person who likes to do market analysis where you have to hold a trade for more than a day, maybe 2 days? All right. Now, the difference between these 2 traders is somebody like a scalper who's going in very short would be looking at a smaller time frame. Hence the 15-minute time frame, maybe even down to the 5-minute time frame, even to the hour. The significance of this, though, is that the support and resistances found even on the 15-minute and 5-minute time frame are same support and resistance found on bigger time frames, but the strength of them is a lot bigger. So if I go back, and as you can see, I changed my time frame now to a 4-hour time frame, and I still have the exact same red line up on the screen. And I'm going to put check marks in places where that line actually hit more than 2 times, as you noticed before. It actually hit 4 times on the 4-hour time frames. That means that would have been 4 different opportunities for me to have gotten in on that exact same trade where you just saw on the 15-minute time frame. Let me go back to that. See, that exact same red line is still there. And I'll put 2 check marks right there as well just to show you. So you'll start to notice the higher the time frame you go, the stronger your support is to back up the basis of your trade. So 2 things now. Consolidating your line to get the most touches, higher time frame, stronger signal. Okay? Now, last thing for setting support and resistance. You can't just go onto the screen and just start dropping lines and think you can trade off of these lines. Don't get me wrong. I know somebody who just trades support and resistance, raw naked charts, and they make very good money. Okay? Some people are not like that. It takes patience. You never know when your support and resistance is not going to get touched perfectly. So these are not for people who tend to oversize on trades or need a very strong market analysis because they're going to be putting in significant amount of lots or money on these types of trades. If you're a small trader trading at small lot sizes, trading raw charts, support and resistance is perfectly fine. But when you start to complicate things and you need to strengthen your market analysis, going up to higher time frames is key. Don't go around just dropping lines anywhere and thinking that you can trade them. You need to see how the market reacts to the support or resistance lines and then position yourselves in places to make money. So the first thing was ensure that you're finding a place in the market where you can get the most touches. Okay? Second thing was figure out what type of trader you are. Are you trading on a smaller time frame or are you trading on a higher time frame? And remember, the smaller the time frame, if you're making money, that's most likely a support or resistance that's already shown up on a higher time frame. Remember that. So ideally, you want to be trading on a higher time frame, but it's your prerogative. I know a lot of people that make money trading on the 15, the 5, and the 1 minute. It's up to you. I personally prefer higher time frames. And the last thing is, don't go about just trading the setup. You need to see how the market reacts to the setup and then trade your setup. Position yourself after. See how it reacts to the support line. Don't just go in and start throwing lots in on a support line, because it's generally a fact that support and resistances break, as I told you in the last video, and they can become supports or vice versa. Resistance becomes support and support becomes resistance. And then you find yourself in a bad trade that's going in the opposite direction of you. Okay? So remember those 3 things. Like, comment, and subscribe. Any questions you guys have, please leave it in the comment section and I'll make sure to answer it. Thanks a lot.